The question is, should you buy a non-qualified annuity versus a qualified? What's the difference? Hey, welcome to the Guaranteed Retirement Guys show. If you got an IRA, or you got a 401k or a 403b or any other tax-deferred, employer-sponsored or government-sponsored plan, all of those typically will roll into an IRA, a tax-deferred IRA. And those are all qualified plans. And so if you have one of those, well, you really don't have a choice. You're going to have to buy a qualified annuity, which is not bad. It's great. I mean, it's still guaranteed income. It gives you income forever. It still stays tax deferred and it continues to grow. The only difference is maybe you got to take out RMDs when you're 73 or 75, depending on what your age is. If it's a Roth, though, you're not subject to RMDs. So there's some kind of cool things about converting to a Roth if you want some tax-free income from your guaranteed income stream. The question is, should you buy a non-qualified annuity? And my answer is absolutely. If you've got money sitting in a brokerage or if you've got money sitting in a bank account, I don't care where it is. Maybe you got some money sitting in some diamonds. One of my clients had $500,000 worth of diamonds sitting in their house. They were thinking about converting it into some cash. And then of course they would buy a non-qualified annuity because it's not in an IRA. It's just literally strictly an annuity. The cool thing about it is you could put $600,000-$700,000 in or $1 million, whatever it is. It does not matter the amount. You put that in, and if it comes from an account that's non-qualified, just from cash or from brokerage, then you're putting all that money in, and it still grows tax deferred, just like it would in an IRA or anything else. So you get those benefits, but you're not restricted on when you can take it out, like 59.5 rule or RMDs. You don't have any of those restrictions. And on top of that, it's going to grow. Maybe your $1 million will grow to $2 million. They're going to tax your earnings, of course, but they won't tax the money that you put in. Of course, the principal that you put in has already been taxed. So that comes out tax-free. Everything else beyond that continues to be taxed. Ordinary income rates, whatever your tax bracket is, which is obviously understandable. Any money that we make, any earnings that we make from anything is taxable. Of course, the money that goes into a non-qualified annuity, that is always pre-taxed and it's never taxed again. Both types of structures, whether it be qualified or non-qualified, they both give you guaranteed income. The only difference is the taxes. And of course, the restrictions that are placed on when you can take it out and if there's any penalties, those are things to take into consideration. That's it for today. If you want to book a call, go to the comments section or go to the description. You'll see that I actually have a link to my calendar. I also have a link to a video where you can learn more and then you can book on my calendar as well. But it's only 30 minutes. If you have some questions you want to go over, you want to look at maybe the best annuities, whether non-qualified or qualified. If you want just some general advice, happy to go over that with you as well. And I'm not going to try to sell you anything, just happy to provide some good sound advice and show you all of the companies that are out there, show you all of the best annuities, and then you can kind of decide for yourself. I'm not beholden to any company. I could care less what you pick. I just want to show you what's available. They pretty much sell themselves. So you can kind of decide for yourself what you want. So I'm there for you. Look forward to chatting with you. And thanks again for watching.